Energy is on fire, up 2.79% this week, with a very bullish trend. Now, what is driving this surge, and can it sustain? This is what every serious investor needs to know about energy right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. This week, the overall market context is characterized by elevated uncertainty, with the VIX index at 26.8, indicating a heightened sense of risk among investors. Amidst this backdrop, the energy sector is standing out, outperforming the broader S&P 500 index. The energy sector ETF, XLE, has delivered a notable performance of plus 2.79%, which is quite impressive given the current market environment. This sector deserves attention right now, as it is demonstrating resilience and strength, driven by a combination of factors, including supply and demand dynamics, geopolitical tensions, and the ongoing energy transition. As investors, it is crucial to stay informed about the trends and themes shaping the energy sector, and this is exactly what we will be diving into in this video. Please keep in mind that this is educational content and not financial advice. Let us start with the technical picture and what the charts are telling us. The energy sector, as represented by the XLE ETF, has shown notable momentum, with a weekly change of 2.79% and a monthly change of 7.54%. The RSI reading of 74 implies that the sector is approaching overbought territory, which may suggest a potential pause or consolidation in the near term. This neutral signal indicates that while the trend direction remains upward, the conviction behind the move may be starting to wane. Key support levels likely exist near the recent breakout point, where the sector found resistance in previous attempts to push higher. On the upside, resistance levels may be forming near the current highs, which could cap the sector's gains in the short term. The current move appears to be a sustainable breakout, rather than an extended overreach, as the sector has been consolidating its gains and building a base for further upside. This week, we will be watching for a potential pullback to the support levels, which could provide a buying opportunity for those looking to participate in the sector's upward trend. Now let us look at the fundamental catalysts driving this sector. Looking at the energy sector for the week of March 23 to March 27, 2026, we have a complex mix of macro tailwinds and headwinds at play. General macro conditions are influencing the sector, with the current elevated uncertainty in the market, as reflected by a VIX of 26.8, which could impact investor sentiment and volatility. Key stocks such as XOMCVX, COP, SLB, and MPC are signaling a mixed bag in terms of sector health, with some companies performing better than others due to their diversified portfolios and strategic positioning. This week, we are watching for any earnings reports or regulatory news that could move the sector, particularly in the context of the ongoing shift towards renewables and energy infrastructure. The longer-term fundamental thesis for being positioned in the energy sector is underpinned by the ongoing demand for energy, coupled with the need for a balanced energy mix that incorporates both traditional and renewable sources. As we assess the sector's prospects, it is essential to keep in mind that this is educational content and not financial advice. The sector's performance will depend on various factors, including macroeconomic conditions, geopolitical events, and company-specific developments. Next, let us talk about the specific risks you need to manage this week. The energy sector is facing several key risks this week, including geopolitical tensions, supply chain disruptions, and commodity price volatility. Given the current volatility environment, with the VIX at 26.8, investors should carefully consider position sizing to manage their exposure. Unexpected headwinds, such as sanctions or production outages, could further exacerbate market instability. To mitigate downside risk, a disciplined framework is essential, incorporating stop-loss levels, diversification, and regular portfolio rebalancing. By adopting a proactive approach to risk management, investors can better navigate the uncertain landscape. It is crucial to remember that this is educational content and not financial advice, so investors should consult their own advisors before making any decisions. And now for the strategic outlook, where does energy stand heading into next week? We maintain a bullish stance on the energy sector this week, given the recent uptrend in oil prices, which have risen by over 12% in the last quarter. A key theme to track is the impact of supply chain disruptions on energy demand. Please remember, this is educational content and not financial advice. If you found this video insightful, please like, subscribe to Financial Market Oracle, and comment your energy watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.